Trump's energy stocks will help you retire early. This is not financial advice. I'm not a financial advisor, but people with such certifications might say that my research suggests that this company could go up significantly in the near future. The company is EOSE. That's the ticker. EOS Energy. They do battery storage for renewable energy. They raised $1 billion recently. They have $23 billion backlog, which is crazy. And they did recently have a fire just yesterday. But it turned out that, according to their report, it was not the batteries themselves catching fire. They do batteries for energy storage. It was a short at their facility. So that bad news is brushed off. The stock looks to be holding up well. It's actually down a bit over the past couple of weeks, like many stocks have been. The market did have a big day today, Moon Day Monday. It's common for the market to go up on Monday, or at least it often is associated with a lot of buying. And right now, all the speculation names have sold off. Quantum sold off. CoreWeave has sold off, which is a data center, basically a intermediary between GPUs and companies like Meta and Amazon, who use those GPUs, and OpenAI, who uses a lot of those GPUs. So a little bit of the transition from where we are now, AI is here, but not nearly as usable as people would like it to be. You can try ChatGPT, you can try Claude, you can try Perplexity. You'll get rate limited. They'll say you have to retry in 24 hours, or you can pay them money and they'll give you an extra capacity. But it sounds like the need for more usage of LLMs and AI is real, based on all of the data center build outs, based on all of the energy build outs. And this battery storage company is well positioned to capitalize on that with a massive backlog. So let's jump into recent earnings and info on this company.
This is Sam Putnam.
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 Okay, so this is EOS Energy. They're a $4 billion market cap company, and they deploy battery for renewable energy markets. Now, this is really important because Edison, New Jersey is actually sort of the capital of energy. This company does have the capacity to raise money, which is good for a startup, but it's not great if you're a near-term investor. Luckily, they don't need cash right now, so that's notable. If we look at their cash, this is their position, over $1 billion, and we can see what they recently raised. 2 million, 5 million, and more recently, some massive numbers up to 525 million, 500 million, basically in the past couple of weeks. So those are the prices for those. It's a registered direct offering, a private placement, debt. So $12, $16, and we look at the stock price. This is where we're at right now. So the raises were right around here, the stock price, up way above, and then right at the current price. And so it's not necessarily telling us the stock's going to go up, but it's definitely not telling us the stock's going down. And if they just raised $1 billion, they're unlikely to raise immediately. Here's what we're seeing on the chart. And yeah, it's definitely not a great earnings reaction, but if you look at a lot of companies' earnings reactions, they went down. Microsoft went down. Netflix went down. The market as a whole went down over the last couple of weeks, and it's only the last couple of days that have really gapped up. EOS is holding over the last couple of days. It's not as strong as the market right now. The challenge when you have a couple big up days in the market is a lot of other companies have big up days in the market. So you kind of end up looking for stocks that actually went sideways even as the market went up, if you're looking for an opportunity to get in with low risk. So this is the opportunity right now, 1270 just about, would be the level to risk. Maybe, you know, a couple days it goes close, or something that you pick and you just decide that I'm going to sell if it goes underneath this level. So maybe it's here, as I mentioned, which coincides with this low here today, but you pick your level. It's just important that you pick it and stick with it. So that's the debt, that's the chart. And then if we actually look at what they're up to, well, this fire is sketchy, right? You have to wonder what the deal is here. Okay. It's risky knowing that that occurred. But if we look at the actual incident and some of the comments, the fire department reported batteries inside the building had caught fire. Okay. However, the energy battery storage company stated that there was no fire. It was just an electrical short and there was no risk to the surrounding community. So you have to sort of read between the lines here. Obviously, the fire department is going to come no matter what, especially to a big commercial facility. But as more information comes out, I think it's going to be showed to us through the Stark chart. So if the batteries were actually involved, I think the company's not going to do well immediately. But so far, it seems like the company's holding up. So what's really interesting about this today is that I just talked about how you don't want to buy stocks that just went up. And what this event sort of did was, at a time when the market bounced significantly, this event sort of kept the stock depressed. And I think as this gets brushed off, the stock could go up significantly without the challenge of buying a stock that's already been up a couple days, which all the other companies are. So recent $1 billion capital raise is a big deal, as we mentioned. And then as far as what they're up to, well, look at this, $23 billion pipeline, 91 gigawatt hours of demand. So that's a ton. I don't know exactly how much that is, but I know 20 gigawatts is how much Sam Altman was talking about for the end of next year needing for OpenAI. And then in 10 years, 10 times that, 250 gigawatts. When you put it in hours, you put it in, you know, battery terms. So we'll see what happens as those numbers sort of firm up at the end of the year. But this $1 billion raise is a big deal. They seem to be positioned pretty strongly. And I think this fire actually held the stock down at a time when the rest of the market went up, which is really, really favorable. Now, there's one other stock I want to talk about and to keep your eyes on. And it's not about batteries. It's not about energy per se. One thing that happens often is during times of uncertainty, gold goes up. And what was interesting in 2025 was gold went up not just as the tariff dump happened from January to April, but even as the reversal happened, gold continued going up all the way up to 4,500, just about 4,400. There has been a little pullback. There was some serious euphoria. And as the market pulled back, gold pulled back as well, had a little bounce, and then is forming a higher low here. So I do think there's a really interesting opportunity on gold in the next week or so. It's not clear exactly when it's going to happen. And I think the best way to play it is with AngloGold Ashanti because it's breaking out over this all-time high. If we look at a 5-year chart, we can see this is definitely the all-time high. And again, this is the challenge I was talking about with EOS, is when the market just went up a couple of days, you can see Anglo Ashanti gold went up, AngloGold Ashanti, a couple of days. So it might not break out just tomorrow, right? Tuesday could be a selling day, right? Because today was an up day. So this could firm up over the next week, but having this really clear level over this 88 high is really important. And gold seems to be the safe haven given we have all these other stocks not doing well that are related to Bitcoin, because Bitcoin sure had a tiny bounce, but it went all the way down to almost, well, not almost, literally $80,750, yeah, per coin. So pretty rough. Ethereum not doing great as well. And just sort of to go around the horn here to make sure we can understand where we're at here. Last week, Oil was down a little bit. Energy stocks were down a little bit. Had a little bit of a green day today, but natural gas is another sort of bridge source of energy that's doing well. Broke out a little bit here. And then if we look at some of the other stocks that were doing well, pharmaceuticals still doing well. This is one ETF that can show pharmaceuticals, but if that doesn't want to load immediately, we can just look at healthcare, which is doing pretty well as well. Oh, I see what I did. I put on 24 chart hours. So healthcare is still doing okay, but interestingly today, healthcare sold off a little bit. Pharmaceuticals, okay, but when we compare that to some of the other sectors, energy, not great. Utilities, big green day. And then if we just look at the actual tech stocks, this was awesome, big green day. So what looked like was going to happen was money was coming out of financials, but financials are back, big tech's back. Basically, the biggest stocks in the market are back. And then these companies that we were a little uncertain about, the healthcare stocks, not doing quite as well as expected. And we can see that with some of these stocks that did break out are in biotechs. So if we look at XBI, biotech did awesome today. Another way is LABU to look at that. But if we directly look at some of these healthcare stocks, think about companies like Eli Lilly, did okay. Novo Nordisk was doing bad and just did, okay, but it had a big gap down. Thermo Fisher, which seemed like it was doing great, actually didn't do well today. Just sort of went sideways. So these big name companies had money flow into them. AMD, for example, pretty much all the companies, Meta except for Nvidia, which didn't do great. It had a little green day, but all this to say, if you're looking for the next stock to get in a safe space, I do think gold is interesting. And this is a stock I actually mentioned in the Discord this morning, KGC, and gold had a big day. So it could take a while for stocks like this to break out, but I think this AngloGold Ashanti looks like it can break out over this level in a way that a lot of these other stocks, NEM is one of them, could take a while, AEM, they just are building out sort of bases and they have this big high to get back over. And look, gold futures could go up a lot. They could not. It might take a week or more. It's tough to buy in a range, as I mentioned, which is why EOS looks interesting in the first place. But I wanted to give you this other idea with the backdrop of the market in general, just to make sure it's out there in advance. So that's AU. And if we look at basically what they're up to, let's do that. Here's the size of the company, a little about the company. It's just good to use this tool to make sure you're not dealing with a super small company, which they're not. They are an ADR, but they're not some Chinese company that's listed on the US exchanges that doesn't have super reputable accounting. They're from South Africa, as a lot of these gold miners are, and they have a $35 billion market cap, right? So you don't have to worry too much about this company in a way you might have to about, let me put an example company in here that's also an ADR. XXII is the example I always use, with the past 6 months. So this is a $5 million company, right? They're a plant biotechnology company. And then if you look at the chart, for example, this thing has been absolutely horrendous. So I'm just differentiating. Anyone who's in stocks for a while is sort of laughing or tuning out right now. But the point is, you have to really make sure you're looking at big market cap companies, or if they're like 500 million or more, just make sure that they have some connection to reputability. So about $1 billion of profit in 2024. That was a while ago, but there's going to be challenges with any company that's located in sort of a dangerous spot. But the price of gold has definitely helped this company. Mining is always going to be, as far as I can tell, a volatile industry. And look, if you want to compare this to other tickers, you can, but I think the most intelligent way to look at it is to say, look, it's $3 million, 3 million shares times $80 a day. So that's like $250 million a day. So if you divide that by 100, that's like 2 million and then $3 million a day you can put in, click the button, and not move the stock. And that's pretty important when it comes up to a breakout point like this, because you don't want to be trying to get in at 86 and end up getting most of your position up to 87. It doesn't seem like much, but it starts to add up. So I think it's kind of in that sweet spot where some of these other companies are other ways to invest in gold for sure. But I think this is the right balance of liquid, but not too liquid. GOLD, NEM, sort of in the same conversation. KGC, again, the one that I mentioned. I'm not super excited about looking at debt to equity ratios. I mean, it's good to know that a company doesn't have a ton of debt. But PE ratios are definitely not seeming to be in tune with the current market. So I wouldn't get super worried about that either. But Newmont and Barrick Gold, if we look at the chart and we just make sure that we look at the liquidity, super liquid here. I'm pretty sure this is going to load, but slowly. If you just look at the gold ETF, again, all of them pretty much follow this characteristic. Super high, lower high, and then they have a breakout spot, but they have to get above this level. So for that reason, AU is the stock I think is interesting. If you have any questions, let me know. Drop them in the comments. Those are the ideas. The main one being a little more dangerous, but EOSE, I think they're going to figure out that battery facility scenario. Hit that like button if you like these ideas. We'll try to keep these ideas short. We'll hit that subscribe button if you want a free course on how to buy stocks before they go up. And head over to stocksforme.com if you want the best idea of the day, like that KGC, which went up significantly today. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.